Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So in today's video we are looking at one of the pharmaceutical companies that is undervalued at the moment. I do not own this company yet, so I want to see if it's actually a buy. I'm looking for a couple of pharmaceutical companies for the family portfolio that I don't actually share here. But at the same time, if this is good enough for obviously this portfolio, then it must be good enough for the other portfolio. So inshallah, I'm going to look at it today. I'm going to give you more details about the company. But before we do that, I just want to say thank you to everybody that has joined us on the Patreon account and the Discord so far. If you haven't done it, so please do so, because it really helps the channel. You can get obviously all the trackers that I actually use in my I just use normally on my day-to-day, if you like it. I've got the ETF ones, I've got obviously the dividend trackers for the US and the UK version, so you can get access to all of that and hopefully build a Discord account where we can, brothers and sisters who are very much like-minded, that can help each other inshallah going forward. Now, as you can see, and also at the end of the video, I'm going to actually show you, I've got a little bit of money, okay, that I actually added today, so for this week's money, and then I'm gonna buy a couple of stocks towards the end of the video, so stay tuned for that. So the company we're talking about today is Thermo Fisher Scientific. This is one of pharmaceutical companies. It's currently trading $520 per share. It's up a little bit today, but a year to date is basically down almost to 20%. For the 1 year, it's down about 7%. In the last 6 months, it's almost down 7%. Again, it hasn't definitely not participated what is happening in the stock market right now, and it's down about down 4%. So what I want to do is look at this company and see if it's actually a buy for us, and if we can add it to our watch list, if you like. So like I said earlier, this company is diagnosis and research company. It provides life sciences solutions, analytical instruments, specialty diagnosis and laboratory products, and pharma services in the United States and worldwide. This is one of the companies that have actually benefited a lot from COVID situation, because a lot of their products were actually used, okay, and since then it has come down quite a bit. So but as you can see, the 5 years is actually up 140%. So this is not one of those companies that are like slow growers. This is absolutely fast grower. Their EPS is, or earnings per share, is $15.35. So the market cap is $200 billion almost. It has a wide economic mode and beta is quite low. Now this is so far really good. I like the beta. I like the fact it has a wide economic mode. It's not a small company, so I want to see a bit more about this company, okay. And the current PE is quite expensive. It basically looks very expensive, but when you look at the forward PE, is only 21.77. That's actually quite low. The 27.72 is where the sector is currently. On the 5-year average though, this company seems expensive. So the 5-year average basically is about 20, let's call it 24. And price to free cash flow though is about 30, let's call it about 36. So based on this, forward looking, it basically looks slightly cheaper, because the 5-year average is 23 and the forward PE is about basically 21.77. Okay, so in terms of dividend, is almost non-existent, so 0.27 is very, very low. But the good news is, if you're one of those people who are still young, who still, if you understand how the business works and the fact that they're going to grow their earnings and so on, and you believe in the business, you can actually buy this company knowing that they will increase this dividend 17% a year or more, which is absolutely amazing, because the 5-year growth rate is basically is 15%, which is huge. An annual payout of $1.40, which is absolutely amazing. They have been increasing this dividend for 5 years. The payout ratio is only 6%, so they have a massive room to increase if they need to. Dividend safety is only 72%, okay, and 72%, which is very good. 60 and above is absolutely amazing. Free cash flow, we're looking at about $5.62 billion, which is really good. So they have enough to basically increase that dividend and pay off any debt and so on. Free cash flow yield, we're looking at about 2.8. We normally say about 3 is perfect, but free cash flow margin is about 12%, which is absolutely huge, and we're normally looking at about 5%. So we're looking about 3% here. 2.8 is absolutely fine. So from dividend side of things, free cash flow side of things, is actually looks decent company, right? Obviously there's a lot more to look at. We don't just take this for what it is and just buy the company. You're going to have to do a little bit more research and look at it historically where the company used to be, because that's really important to us, right, as investors. And obviously then you need to look at forward to see what the company is going to generate in the next few years. So profit margin about 14%, operating margins of about 16%, return on equity 14%. Total return in the last 10 years, we're looking at about almost 20% from this company, which is great. So that includes the dividend as well as price appreciation. And return on invested capital of 10%, and the revenue growth and the compounded annual growth of the last 5 years, we're looking at about 17%, which is really huge, right? Current ratio, we're looking at about above 1, which is what we're normally looking for. So this means the company can pay off their debt easily. If you haven't given the video a like by now, please do so, because it takes a lot of time to do these research and put these videos together. I would really appreciate if you can do that for me. It takes a couple of seconds and it doesn't cost you a penny, okay? In terms of valuation side of it, we're looking about 11%. The growth estimates for earnings side of things, about 12% next year, which is really huge. And then after that, almost 9% every year in the following 5 years, which is absolutely what you want to see from this type of company. So the price we've already seen is about $520 per share. According to Morningstar, is 12% discount right now. Their price target is $590 per share, which is good. So that's 70% upside from $70 upside from where we are right now. Fair valued in terms of simply Wall Street is actually saying it's about 13%. Again, more or less the same. These two kind of agree. They use intrinsic values, okay, which is really good to see that they kind of agree more or less what's going on with the business. In terms of tip rank, they're saying about 645. These guys use analysts, okay, so they do they average out basically what the analysts have given in the last 12 months, and the price target is basically 645, 629 for Seeking Alpha. These two more or less use same analysts, so that's why they are very similar or very close in terms of their expectations for the company in the next 12 months. According to Seeking Alpha, it is a buy right now. And so what would I do if I was in your shoes right now? And this, first of all, you're going to have to make sure you understand how the business model works. If the company is generating revenue, where that revenue is going to come from, how much of the revenue has grown in the last couple of years. Is it going to continue doing that? Based on this, it looks like it's heading in the right direction. So let's have a look at from revenue side of things, okay, where the company is right now. So right now we're looking at about 44, let's call it $45 billion in revenue in 2022. 2023 they're expecting 45.27, so it's going up, and then they're expecting 28.7, so that's a massive growth. 48.72 billion dollars. Okay, that's what I want to say. So yeah, you can see it's definitely heading the right direction in terms of revenue. Again, this is prediction, so that's estimates from the analyst and basically based on what the company sells and so on. In terms of EPS or earnings per share, if we take out the estimates, you can see it had a little bit decline, and maybe in 2022, because of that decline from obviously selling COVID related products, it's gonna have to come down a little bit, right? So next one, we expected it to go up, which is basically just what's going to happen, and then it's going to bounce back. So it looks like it's heading the right direction. Now, the other thing I want to show you quickly is the earnings. So this is the earnings estimate. Again, this is based on what these analysts are thinking about right now. This is not factual information, so you have to think about that, okay? So 2023, they're thinking basically about 2% growth, year-on-year growth will be about 2%, and that is 26 analysts are looking at this company, 24 and 18. So I'll use the first three as usual, okay? That's where the 21 PE came from. The following year, okay, is $26.52 per share. This is, remember, this is EPS, right? So this is earnings per share. That's about 11, almost 12% growth, and that brings down even the forward PE even lower, and then lower even then. So it looks like the company, it is definitely heading the right direction, okay? It looks cheap enough from where it was going to be in a couple of years. Okay, and then in terms of revenue side of it, where we are right now is $45 billion, and then 48, 52. Okay, again, I'm only going to use the first three. So you can see this year is going to be flat. So if you're happy with this type of company being this way this year, okay, the following year you're going to make about the earnings are going to grow about 7.6, and then about almost 8%, which is really good. And this is what you want to see from a company like this. So they're not a small company. Remember, they are $200 billion market cap. Okay, so that's quite huge. So in terms of what I've shown you already, the Seeking Alpha on Wall Street more or less say it's actually a buy. Quant is actually saying it's a hold. But even if it's a hold, it's basically hedging towards that buy. And when you look at the 52 week high or range, for example, right, it's more or less closer to the 52 week low than actually to the 52 week high. So this is one of those interesting companies that I've had on my kind of watch list for a long time, but I haven't had the opportunity to actually buy it. But it looks like it's actually fairly valued right now, or even undervalued if you think about it. In terms of Sharia compliance side of things, it's absolutely fine. There's no issues there. And they have been buying the basically shares in the last few years, although they've increased here and there. Okay, they have been buying it in the last couple of years basically, which is nice to see. Obviously it's heading the right direction. So this is one of those companies that I actually like. And if we look at Seeking Alpha, you can see it's 4-star right now. Okay, so whether I'm gonna add it to the family portfolio or on my personal portfolio, it's gonna be one. But I'm definitely gonna add this company within the next 2 to 3 months. Okay, and what I'm gonna do is I'm gonna add it to my watch list. So I'm just gonna you've got access to this, by the way, if you get the Patreon account. Okay, so all you just need to do is put the ticker symbol, everything else is populated, and then you just put the target price. So their target price right now from Morningstar is 590. So I'm going to put that in, and then I'm going to give myself a margin of safety. Okay, all I need to do is, instead of, I'm going to give about 10%. Pharmaceutical companies are a bit funny, so I'm going to give 10% margin of safety right now. And if I do that, straight away it says a buy. Okay, so my buy target is $531 per share. Right now is $520 per share. So it is a buy right now, and it's a very interesting company like we've seen. But then again, I'm now going to go away and do a little bit more research about the company, their pipeline of products, the type of products that they sell, what basically companies they work with, the industries that they work in, the companies they work with, and so on, so on, so on. So there's a lot more to unpack. Okay, now finally, before I stop the video, so that's basically what I'm going to do with that company. Inshallah, it will be on my watch list, and I'm going to look into it in more details. Now what I'm going to do is buy some stocks, like I said to you at the beginning. So I'm going to add to automatic data processing, because it's been down quite a lot recently. I think I'm down, there we go, about 6% right now. So I like the company. I want to increase my, basically I've got about £2,000 worth of shares in there, so I'm going to increase that dollar cost average every single month. I'm going to send that to the market and see what happens. So my average £184 right now, 183, so it went down a little bit. Every penny counts, right? The next company that I'm going to add is J&J. Okay, so J&J is one of those companies I've had in my portfolio. Love the company, so I'm going to add 1 share of this company as well. Okay, it seems undervalued at the moment. And finally, the final company that I want to add to is Public Storage. I've got, I think, £75.77, so I'm gonna add that. So 75.75, send that to the market. That will give me about 0.3 shares of this company. Again, another one that's undervalued at the moment, and I think I'm going to keep dollar cost averaging into this company in the long run and see where I am. So as you can see right now, that is everything that I've had today. That came from some dividends as well as the basically money that I've added. If you like this type of transparency and you like what you see here and you're enjoying the videos, please like the video, subscribe to the channel. Let me know what you think. Let me know if there's any specific companies you want me to look at as well. Let me know. Inshallah, I will look into them. Inshallah, have a wonderful day. Assalamu Alaikum.